So a little bit about Srini over here. He is building this app called Couple.money, which is essentially joint bank accounts for couples. Whenever you guys also get a partner in life, I think this will be a useful thing for you. So let's start on that. I will leave it to you, just do a little bit of intro, and then we'll move on.
For sure. Firstly, great to be here. I don't think I'm a very D2C kind of brand. It's very B2C, but I don't know how the definitions work nowadays. But as a brief intro, I'm a Bangalore boy. I pretty much grew up here as well. Went to BITS Pilani for about 4 years. Got back to Bangalore, worked in consulting for about 4 more years, and after that started Couple. We started Couple while we were in the Entrepreneur First cohort, which was in 2021. What Couple does, in short, is, what we essentially saw was a lot of young couples in their 20s and 30s were basically making all these shared and household payments via different individual accounts, and then they were using Splitwise to track it or some other tracking tool to manage, either to split it between each other or to basically just have a view of the budget. And then when a lot of couples tried to open joint accounts, we saw that joint accounts were very tough to open at traditional banks. You have to have the same surname, the same address, you have to have a marriage certificate and all of that jazz. So we decided, let's let couples stop doing Splitwise all the time. Now, I mean, they're married for Christ's sake. So we started a digital joint account, which can be set up in about 60 seconds. And we offer co-branded RuPay cards, one for each partner, to make all these shared and household expenses like groceries, utility, rent, etc. And it's also great for couples who want to use it for a travel expense. Let's say you're not living with your partner, but you're traveling together. So it's an easy way to have like money loaded into our Couple wallet and then spend that when you travel. So that's essentially what we do. We're trying to make a one-stop financial platform for couples, starting with expenses and then moving on to lending, credit cards, investment, and probably insurance. So that's a brief intro.
It's amazing, yeah, that's amazing. A little known fact also that I think we forgot to mention over here, Couple is also YC back. They were in the YC Summer 22 cohort just 2 years ago. Why don't you tell us a little about that? How was that like?
Oh yeah, for sure. So I think, and as we also discussed, I think the path to how we started building this is also very, very YC based. So I think one mistake that I'm not sure how much this is applicable to D2C, but it is very applicable to B2B, B2C, software companies, where a lot of founders end up working on ideas that they think are good ideas, and then they build this product because they think this is what people want. So what we did early on in our journey was, we thought, we were sure that, and maybe a little context as to why we built this in the first place is, in 2021, we were in the Entrepreneur First cohort. How many of you have heard of Jupiter and Phi, which are neobanks, right? Awesome. So my fundamental, controversial view is that in India, if you have an HDFC account, for example, and if you have Google Pay for payments, then you have a pretty good savings account experience for an average consumer, right? You don't need a Jupiter. So we felt that Jupiter wasn't really solving a big problem. We felt that neobanks would be great if they're targeted to a particular vertical. Like, for a lot of early stage founders here, I know if you have a small team and you don't have a CFO, you're probably computing your tax, your TDS and your GST manually every month, and then you're paying it manually on these government platforms every single month, and then you're probably sending it to your accountants for filing, right? But imagine if you had your current account where your tax could be calculated automatically, paid automatically, and then filed automatically. So that's kind of what we thought about neobanks, that if you could create a very personalized experience for a particular market, because that market just has a very particular use case, right? So banking for small businesses like say ours versus banking for a 300 crore top line business should be very, very different. So we saw a lot of reports back then about where neobanking really makes sense from a vertical perspective. And we saw teenagers use case, small businesses use case, farmers, neobank, etc. What we didn't see was neobanking for couples, but we saw this so often with all our friends, because our friends were always fighting and cribbing about money. One person in a couple does not use Splitwise because they just forget to do it, or Splitwise Pro has something where you have to pay if you want to make more than X entries per month. So we clearly saw that, hey, this is surely a problem, this is surely a big market, and we were very certain that couples have a very strong need for saving money together, maybe because couples obviously have to, and this is before the Splitwise insight, right? When we saw that this market really makes sense, we thought that we'll build this product for couples to save money together, because obviously as a new couple, you're saving for travel, you're saving for a down payment for a house. So we started building the savings product, right? And that's when we got into YC as well. And I think the first lesson we learned in YC, and we'll go deeper as well, is to build something people want and not to build something you want. This whole saving product for couples is something that made sense to us, but when we really thought about it and we took it to market, we saw that couples don't really want to save together. They can save individually in individual fixed deposits or whatever, and that use case is fine. The real problem came with actually managing household expenses, because every day you're managing it individually, you're tracking it somewhere else. So that was one of the first lessons we actually learned from YC, that how to actually talk to customers to understand their problem, and not to ask questions like, to validate the savings problem. We used to go to customers who are potential customers and say, hey, what, I'm this Bits Pilani guy, my co-founder is this IIT Kanpur guy, we're clearly very smart people, and we're building this awesome product for you, will you buy it? Now obviously they're going to say yes, right? No one's going to say no, because it's weird to say no. But then we started asking them different questions that, hey, do you actually save together in the first place? And then they just said, no, we don't. And then we asked them, do you want to save together? And they say, no, we don't really want to save together, we track it individually. So clearly we know that that's not a problem to be actually solved. Then when we tried to ask them that, okay, how do you manage expenses together? Then they started reacting, saying, oh, that's actually a big pain. Some people said Splitwise, some people said WhatsApp group, some people said Excel. So then we knew that we were onto something, and that's something to actually solve for, right? So I guess the first lesson there is how to talk to customers, how to understand what the customer pain point really is, and then to actually start building something that a customer really needs or is really solving a problem for a customer.
Awesome, yeah. I want to dive a little deeper into this because it leads to a very interesting space. So, like you said, you talked to these couples and you understood what exactly they want rather than what you want to sell.
Yeah.
But this is not a B2B, this is not you're looking at a specific kind of business, it's not like you're looking at, say, a specific kind of a consumer. How do you find out, and there's an extension to this, how do you find out your target audience and what are the channels that you would use? Because it's not like people usually put it out on public that, hey, I'm dating someone or married. So what are the channels that you use for customer acquisition and finding where your customers are? And on extension to that, when you want to market to people like these, how, while you can do wide marketing on Instagram, how do you specifically target this audience and figure out where they are sitting, and sort of what are the techniques that you use to entice them into the product?
Oh, okay, firstly, that's a great question, right? And we have an interesting answer to what we did. So we launched our app in October 2023. So it's been about a year now that we've launched. And our whole strategy early on, right? And this is again a learning from YC and a lot of other companies that have achieved like deep product market fit. I think our strategy was, let's take this app live, let's put it into the market. Obviously, we'll announce it on LinkedIn, so we get some amount of eyeballs on it. Let's not do PR, let's not run ads, let's not do any marketing. Let's see in about 2 months how many users sign up. Because these users are users who are signing up, and obviously users that are signing up and that are using the platform, right? So let's see in 2 months how many people are signing up using the platform, because these are users who are really organically being attracted to the product because of some kind of use case they have. So then at the end of 2 months, even if we have only 100 users, let's try to understand who these users are, why they signed up, where they're from, and basically in simple words to understand what is the TG that we are really building this for. Because mentally we thought we're building this for, the tier 1 Bangalore, Mumbai kind of couple who is super financially savvy, who doesn't maybe live together but is dating, so can't open a joint account and is busy on Splitwise. That's what the hypothesis was. But after this one to 2 month period, we had about 300 users that had signed up, and we actually physically called all of them to ask them who you guys are, why did you sign up, as in what's the problem that this is solving for you, where did you learn about this from, is it linked, so then we know what channel is working well. Although we weren't doing marketing, but we know for sure that if they learned it on LinkedIn, then we could probably push more on LinkedIn. If they learned from word of mouth, then we know that maybe we can build a product referral program in the app. So that's what the strategy was. And then we learned something very different. We learned that that our audience is not tier 1 dating couples. Our audience is married couples and live-in couples, couples that have a recurring monthly expense or daily expense use case. And these are couples across tier 1, tier 2 and tier 3 as well. So based on that feedback from actually understanding who the audience is and why they came and where they came from, did we start building out our, not only marketing campaigns, but that's when we started pushing our product. We started making sure that if word of mouth has worked well, we would call customers, give them a good experience talking to us. So they would also be, we would nudge them that if you know a couple as well that's getting married recently, then probably tell them about us. This could be useful for them as well. And we still don't spend on marketing at all. Our CAC is 0. We're currently at about 25,000 users. Pretty much 60% word of mouth, 20% SEO and search, and 10% is I create some content. So it kind of just, we get some users from there. But basically that still worked well for us. At this point, it makes sense to put capital behind marketing and behind acquisition and retention. But our fundamental belief was that before you have PMF or some semblance of PMF, and PMF, not being some vague value or vague concept, but that our retention numbers were exciting enough that we know people actually like this product without any spend from our end. Only then does it make sense to assume you know your customer, and only then does it make sense to put money behind marketing. But yeah.
Awesome, yeah, that's great. And like I said, what I want to know more about is also, it's a fintech product but built for couples, but it's essentially like a neobank, right?
Yeah.
This is the question I've always had, I've never got to ask anyone, is while building a neobank, you're obviously building on the back of a traditional bank.
Yeah.
And I'm guessing Couple on RPL, right, if I'm not wrong?
No, we have a few partners, but our primary partner is IDFC First.
IDFC first,
Yeah.
right. So how does that work? And if someone over here was to sort of get into the fintech space and sort of learn about that, how is the relationship with that bank? How does it work? And can you give us some insights on essentially how one can carry that out and reach that point?
Oh, for sure. That's a great question, but I want to disclaim something for sure. I think in India it's quite clear that if you're starting up in the tech space, your first option is B2B or B2C. Going B2C is already playing it on hard mode, right? 99% of B2C brands don't work out, right? That's the macro level number. So it's easier to be in the B2B space. Now, in the B2C space, if you want to play in harder mode, you should be in fintech, right? So that's a major disclaimer that people understand only after they enter that, it's not even like you build great software and you can offer that, just between you and the customer. But you have now this bank to please, you rely on a lot of APIs from the bank, and if the bank has a downtime, then you have a downtime, even though you may be using a great WhatsApp vendor like Netcore or like great partners like AWS. So, but yeah, to answer Mitul's question, how it typically works is you need a license share agreement. In India, you cannot be a neobank or you cannot have any kind of a banking product without a license. This can be in two ways. One is you get your own banking license, which is extremely difficult. You can just say next to impossible. You're better off trying to acquire a bank to get a banking license, like something similar to what BharatPe did. Or you go the neobank route, which is you convince a bank to basically do a license share with you. This takes time because there are only about 3-4 banks currently in the market that are doing neobanking deals, and you need to please one of them, and oftentimes because of lack of bandwidth at their end, they only do about 1 to 2 neobank deals per year. So we tried, for example, to get Federal Bank as a bank partner. We were obviously very much in their office, giving them a projection, all of that. They were really convinced, but they said, we just did a deal this year, so our 3-person tech team now is busy, right? So we were kind of screwed there. So finally, we went to IDFC First and LiveQuick, which is a PPI partner. And how it typically works is you sign a co-branding agreement with them once they're convinced that your use case will really drive revenue for them and drive revenue to a market that they don't already have, right? That's why the teenage use case worked pretty well for banks, right? That they are not able to tap into the teenage market, and therefore companies like a FamPay or a Streak or whosoever or an Akudo was able to tap into that market. Similarly with us, we told the banks that the TG we're going after is using HDFC and ICICI and top tier 1 banks, and the day they want to open a joint account, they will likely just go to one of the banks that they have, they're not going to go to an IDFC first unless you give them some kind of, amazing lucrative offer, right? And banks save their lucrative offers for credit cards and not for accounts. So we said that we will give you this audience because we will make sure that they sign up because of our amazing UI and our razor focus on that segment. And it won't matter that we're IDFC or we're Federal or whoever. And because of us, you will have this access to deposits and you have access to customers that you wouldn't have access to before. And then after that, it's a very tech game where you're just calling APIs for critical banking functions like balance check, transactions, deposits, etc. And then you build the entire front end and you manage the customer lifecycle from the front end. And obviously have awesome UI because that's the main USP of a neobank, that it's easier to use than a traditional bank. But yeah.
Great, yeah. I think we're going to switch avenues a little bit, and this is a little more for the D2C audience over here. Coming from personal and friends experience, I've seen spending habits for individuals versus couples is very different. And when it comes to couples, there's a lot of persuasion, there's a lot of, purchases made just to please the other person and sort of, stuff like that.
Yeah.
So you having seen a lot of data on the couple spending, do you have any insights on how people spend individually versus how they spend as couples? Yeah. And something that the D2C brands over here can take away in terms of any campaigns that they might have to do to sort of attract the couples market, because while you're doing it in the fintech space and the spend management space, that audience as a whole can be targeted as a group and sort of targeted in a different way than we're doing individuals right now. Yeah. And some insight that these guys might take away.
Oh no, for sure. I think this is a great question, especially, and I think that's a good correlation to like an insight that a D2C founder or an operator can actually get. So I think I've learned this more than from transaction data, because in transaction data, I mean, we are pretty much keen on seeing that people are transacting on the same brands every month. In the sense, if a couple is paying rent in month one, we think they're a high retention couple if they're paying that rent, or through couple month 2, month 3 as well. So we do have a sense of what brands couples spend on, but the issue with our platform, or the issue by design with our platform, is that our platform is meant for shared expenses only, right? So let's say if I'm not gonna, or my partner, for example, is not gonna spend on Nykaa on the couple account, right? She'll use the couple account for a book my show at max, or mostly for Zepto, Zomato, Blinkit, or an Uber if they're going together somewhere, right? And a lot of it is for utility bills like electricity, broadband, gas, etc. So that's the use case. So where I actually learned this is, a couple of months back I started doing a course on this company, on this platform called the 1% Club, and I do this course called Couples Finance, which is a very creative name, and it's essentially a course which is an entire gamut of how couples can, for example, save money on an engagement ring by doing a lab-grown diamond versus a real diamond, and it goes through the entire detail of couples investing, lending, borrowing, spending, right? So I think one thing I've learned, and what a D2C brand, and this is not like secondary research, okay, this is from my experience, so you can validate this yourself, but what I've seen very much so with couples once they get married is that men start spending a little lesser. Men start really thinking about, oh my god, I have to invest my money, I have to like make sure that I'm building this corpus and I'm actually like, doing something with it, because suddenly I think the pressure just inherently gets really high, and fuck, I have to like buy a house, my father-in-law is judging me and all of that. But that's when women get the flexibility and the assurance that because there's a guy who's actually taking care of our real financial security, I can make sure that I can splurge a little bit. And I mean this in the nicest way, right? I mean, like, men also like going on holidays, but men are too caught up saying that I have to save for my SIP. So women are the one who kind of say, you know what, let's go on holiday, or let's buy this for the house. So what that kind of translates to, in my experience, both talking to people qualitatively as well as a macro data level, is that a lot of spending happens from women, right? So it's best to target women for all these shared purchases as well. Now, obviously, if you're selling a concealer on Nykaa, you'll obviously target a woman. That's a no-brainer. Or you're selling a watch, you'll target a man. But if you're selling something that's a common expense like travel, for example, you're better off targeting a woman. Or if it's another D2C brand, like for example, a lot of these great bedsheet brands that I've seen these days, right? Like really nice satin bed sheets. It's a little expensive as well. You're better off targeting women, because men at the end of the day, they'll say yes only, that this makes sense for us. But like, women are the ones who will actually do it. So this is honestly what I've seen. And trust me, if you guys run this kind of campaign and target this way and it works out, like, you can come and thank me for that. But in my experience, for sure.
Awesome, yeah. So also in the interest of time, I will end my thing with last two questions because
Yeah.
one I've had to ask to Ramesh. One is, tell us something, I would say one secret about YC that public would not know, but something that they can take away from and have that in the kitty when they are applying, if they are applying.
Yeah.
And secondly, what's next for Couple.money? How are we going to see Couple.money evolve in the next year?
Oh man, okay. So see, YC, I mean, is everybody generally aware of how YC works and YC in general? Because I know a lot of D2C brands don't go to YC, right?
Let's have a show of hands. How many people over here actually know how YC works?
Okay, perfect. So you know, for maybe I'll take maybe just half a minute for the ones who don't know how YC works. So YC is a very storied accelerator in Silicon Valley, where they have a 3-month batch twice a year, a summer batch and a winter batch, and they invest in about 200 companies, and they invest about $500,000, which is there's about 4.6 crore, 4.3 crores, and it's extremely helpful because for a multitude of reasons, which is one, they really give you the fundamentals of how do you look at your business and your metrics. They teach you a lot about, because as an early stage startup, you got to assume that you don't have product market fit. You got to assume that you have a hypothesis because you've talked to customers and you believe this is a problem to be solved, but you're not sure whether this is really a problem, because even if I say I'm building something which is great for every D2C founder, I can go to you and ask you that, hey, I'm building this, will you buy it? And you may say yes. But it's only when you actually use it and I see retention numbers that I know, or in your language, a repeat order, that I know that, hey, this is actually a problem being solved and there is some amount of product market fit, and you should only scale after you have product market fit, right? So YC really gets that very ingrained in your head on how to look at your business, when to not spend money, how to talk to customers. And also the YC network is super helpful because, for example, we became great friends with the founders of Razorpay, Grow, Cashfree, all these guys who became exceptional vendors for us, right? For example, if we had to go live with a payment gateway, we could just call up Harshal from Razorpay and it'll happen in a couple of hours. So the network you get from that is also exceptional, which is why I think early stage, because when you have capital, if you already raised 10 million, you can buy network because people will anyway approach you for XYZ things, right? But when you don't have $10 million, if you're just running on, say, less than $1 million, network like that really helps, right? So that community is super helpful as well. So that's the good part about YC. A very, kind of technically bad part about YC, which is super technical, but the only thing that really comes to mind is YC makes you set up a US company. So you got to be really sure that if you're going to run your operations only in India, having this US company set up becomes very difficult to actually get Indian investors on your cap table, right? So if you're a company that, one, for sure will build in India, two, for sure will need venture money to scale, then you know that this is going to become a little tricky, because 3-4 years back, investors from all over the world used to invest in companies in India, right? The whole funding boom in 21, COVID time, that's no more the case now, right? Today, Indian investors invest in Indian companies, US investors invest in US companies. So that's one problem of YC. And also that it's very important to know when to go to YC. So it's great to go to YC. Obviously, the earlier you go, the quicker you learn. But it's great to go to YC when you're already live in the market, because you get to really grow very, very quickly. And the support system you have there with your group partners as well as the other peers and other founders is exceptional if you're already in the market and you can quickly experiment with things instead of, for the first 2 months of YC, we were actually still building. So we felt those 2 months were pretty much a waste, right? Because every week we would have these group meetups at YC and we would not be able to talk about numbers because we had no numbers. And only in the last month could we actually take value of it. So those are two things I'd keep in mind. But I think overall, the network still helps me tremendously. It helps with bank partnerships, it helps with PR, it helps with honestly in Fintech, and this may not be relatable to a lot of you, but in Fintech, trust is a big deal, right? So if you can't show that, I have 100 crores in my account, you can show through other signals that, okay, they're backed by Y Combinator, which means probably this company is not a fraudulent company. Whether it's a good company, good product or not is secondary, right? People will sign up and still say maybe it's a shit product, but they at least will trust that this product is not completely fraudulent. So that's another big benefit that I find from IC overall. What was the second question?
What's next for Couple?
Yeah, what's next is I think we've got great traffic, for our from an organic point of view. We're at about 25,000 couples processing about 22 crores in transaction volume. We feel that okay, we have PMF, so now we can start pushing money behind marketing and actual capital behind the GTM to scale this in terms of just more users and more transactions. But this is also a great time for us to venture into new products. So again, we keep as founders as well as in our team, we tell our team as well that you don't get engineering bandwidth unless you talk to a customer, right? So if you have an idea that hey, we should launch a mutual fund feature, no, you don't build that at all. You don't put it into the PRD. You don't do anything. You first talk to 40 customers. You try to understand whether this actually makes sense for them, and then you build it, right? We don't write a line of code without being sure that this is solving a problem for a customer. So in that journey, we figured that one big problem for customers is India is moving to a very credit-friendly market, slowly, but it's happening. So a lot of couples on our app actually want to use a credit card. Today, you need to deposit money into your couple account and then spend via the RuPay prepaid card. But tomorrow, we want to give users the option that just spend and then pay it back, right? And also get points because we will earn more money through your interchange commission, which is your transaction fees. It's more for credit than debit, right? So that will be the next phase, which is a credit card launch in India. And we also see a big pull for a credit card play in the US market. So we'll likely be launching a credit card play overall in the US market. We already have a US setup. So it's just a matter of a bank partnership and taking it live. And we believe we're actually more bullish about US market than India for a credit card, but we'll see. Yeah.
Awesome, yeah, that's great. Thank you so much.